Good day, and this is Shauna Casey, and welcome to this SOS educational webcast, RSU Release Prep. It's all about your checklist. Due to the large number of attendees, no conference call service is available for this webcast. The sound will broadcast through your computer speakers. However, if you wish to ask a question at any time during the presentation, please feel free to type it into the questions and answers panel of your WebEx console, and we will do our best to answer them as they come in. Any questions that we don't get a chance to address during the webcast, we will follow up afterwards with an email. This morning we sent an email with a link to the presentation materials to everyone that registered as of 10 a.m. Pacific this morning. This session will also be recorded, and we will send a link to the recording and materials in the next day or two. I hope that all of you are familiar with Stock and Options Solutions, or SOS as we are more commonly known. For those of you who are not, SOS is a leading stock administration, staffing, consulting, and outsourcing firm within the equity compensation marketplace. SOS provides interim and permanent placement, expert project resources, and total outsourcing solutions. To learn more, you can visit us online at www.sos-team.com or call us at 888-SOS-0199. Next, I'd like to introduce you to our speakers for today's session. We are pleased to have Carrie Kovac, Dan Schickler, and Chad Settles on the panel today. As the West Coast Vice President within E-Trade Financial Corporate Services Group, Carrie oversees a team of relationship managers responsible for managing the firm's relationships with existing large market corporate clients. Prior to joining E-Trade, she was the Director of Global Equity Compensation at Symantec Corporation and was the Director of Investor Relations for Aspect Communications. She received a Bachelor of Science in Commerce in Accounting from Santa Clara University. She is a certified public accountant, a certified equity professional, and holds her Series 7, 24, and 63 securities licenses. Carrie is also a frequent speaker on equity compensation topics at industry conferences and events. She serves on the Global Equity Organization's Board of Directors and is on the Northern California GEO Chapter Committee. Carrie is a member of the National Association of Stock Plan Professionals and the American Institute of Certified Public Accountants. Dan is an equity consultant for Stock and Options Solutions. With 20 years of experience in equity and corporate trust, he has worked with publicly held companies and on the vendor side, specializing in management consulting, creative solutions, and writing personal bios in third person. He is also a stand-up comic. Chad Settles is an equity compensation consultant also with SOS and assists clients with various projects. Chad has 13-plus years combined experience in HR compensation and stock plan administration, which involved various roles, projects, and responsibilities. Prior to joining SOS, he served as Senior Manager, Equity Compensation at Mylan. Chad holds a BS in Economics from Arizona State and an MBA from Thomas More College. In addition, he is a member of the NASCP and GEO and currently holds a Certified Compensation Professional designation. Next is our standard disclaimer slide. We'd like to remind you to consult your own advisors before making any changes. As I mentioned, the materials are available on our website, and here again is the link. Thank you all for joining us today, and with that, I'll turn this presentation over to Dan, who will introduce our topic and cover the agenda. Thank you.
Well, welcome everybody. Dan Schickler here. The tone of your introduction, Shauna, sounded like a message from the emergency broadcast system. But I want to assure you that everything is fine, under control, and we're going to guide you through this presentation. So, yes, material slide. We said this out earlier. This is all about checklists and actual tools. So it's very important that you actually have these things accessible, either printed out or viewable on your site. Of course, we're going to be showing them in the presentation, but it's all about these tools. So let's proceed, shall we? Okay. Now, as far as the title, yes, you've all seen it. The title is indeed, quote unquote, all about your checklist. But there is kind of an undertone here, and that's really about the fear that really never goes away when stock administrators are involved with a major event. We kind of debated this title internally. I lost. This is the official title, but my title, I'll at least be able to share it here. Much of stock administration is really not breaking things. And there is always that fear because we do kind of work in isolation. So let's move on. Now, here's one of my favorite guys, John Wooden, the late basketball coach at UCLA. Failing to prepare is preparing to fail, one of my favorite quotes. And RSU release is, if nothing else, about preparation. So please let that sink in for a minute. This whole presentation here was kind of inspired by my first release. As an introduction of the anxiety that I went through, I'd like to kind of just have a little dramatization of my first experience of having to deal with this. Basically, I was on site at a client as a consultant for SOS. I had to kind of, figure out everything really in just a few weeks. And my charge was simply, don't screw it up. And I started looking into it, and there's just so much to consider. The plan document didn't help. It was very broadly written. My notes just kept growing. I was feeling overwhelmed, and I was really having a hard time tracking everything. It was chaotic, to be honest. I had no real system. The time was running out. I was kind of desperate for some practical guidance. I read books and user manuals, but they're either too detailed or just about theory. Everybody had an opinion, but there's no real consensus. I couldn't believe there were no universal tools for RSU release prep. I wouldn't call it exactly an anxiety attack, but my mental bandwidth was definitely overloaded. So here we are, all alone under a deadline. This is what was going on in my head, and it's probably universal for many other people. Has everyone accepted the grants? Did you upload all the elections? When are we getting the last payroll file? Did you audit the tax codes? Has everyone opened their brokerage accounts? And what about their terms and conditions? Did you follow up on the W-8? Do we have any releases for officers? And don't forget about the deferral elections. And don't forget to send invoices to people who are paying their taxes with checks, and remind the people who are paying with cash to make sure they have enough money in their brokerage account. And get an estimate of how many shares are going to be sold, because if it's more than 20,000, we need the broker to manage the trade. And is legal okay with processing releases in a blackout? And don't forget the dividend equivalents. Remember, everybody gets cash except Canada. They get shares. And our retirement eligible people already pay their FICA, so don't withhold it again like we did last time. Germany keeps talking about mobility. Ask illegal if we're supposed to be tracking it. And the default elections. Management just changes to share withholding. Make sure you update the system. And finally, terminations and forfeitures. For God's sakes, do not forget to load the termination. So there you have it. There's my introductory rant. And just looking at this, here, this is what you're looking at here is what the checklists are designed to solve. As I said on one of the previous slides, release prep is, with so much to track, it is a little like herding cats. And the tools we're about to present are intended to, quote unquote, as we said in the promo, quiet the chaos. And also, as I like to state from the promo, you're about to step towards the light and our panelists, and you will accept and receive your release prep checklist. By doing so, you will experience a sense of order, inner peace, and clarity that only the most organized stock plan professionals can achieve. So this webcast is going to demonstrate how to use checklists along with your equity plan software's pending lapse reports to, as we say, conquer the complexity and slow the moving parts. And at the end, we're going to delve a little more into detail on one topic, and that's if your company is granting restricted stock units with acceleration or continued vesting available at retirement. This webcast will also show how essential a strong checklist can be in managing the expense, tax, and 409 implications. So there are 5 primary
Dan, I'm going to interject for just a moment. I'm sorry. We have gotten a lot of questions from people who have not gotten the materials or didn't get the email with the link to the materials. So I have just published a question, an answer to a question that was not private. I did not keep it private. So you should be able to go to your Q&A box on your WebEx console and click in there, and that will have the link to the materials there. So you don't have to go back, Dan. I don't suggest you do go back.
Okay.
But I just want to make sure everyone knew that the link to the materials is now in your question answer box. All right. Sorry, Dan, for interrupting. Thank you.
Great. And again, not to panic, we will be showing the checklist here, and you can always access them later. So it might be difficult anyway to be looking at your desk and then looking at the screen at the same time, but either way, we will get them to you. So as I stated, there are 5 major tools. The first one, we're going to take a macro view from like 30,000 feet to look at the whole process as it relates to prep. And then we're going to look at, and this was designed after an experience I had. Of course, every release is a little different with variables, but then we're going to go into a micro view with the things you need to track, which will be a companion piece with an actual pre-release report. Then the 4th item, we're going to talk about taxes and setups and audit, and then finally we're going to talk about eligibility. Now one thing we're not going to discuss, now I know past webcasts have talked about way up front when there's plan design considerations, there's strategy with the comp committee on when to award RSUs. We're not going to go that. We're right in the middle. This is all about dealing with an actual scheduled RSU release after all those major preliminary upfront decisions have been made. So before we jump into the checklist, let's address the first question. So why checklists? I mean, what's the big deal? Well, as I mentioned in a recent article in SOS's newsletter, brain surgeons and airline pilots use checklists. Laws mandate that they do so. Why? Because the risk of missing one step is just simply too high. So the same is kind of true with processing an RSU release. Of course, there's no lives are threatened, but it's about details. I mean, I heard a recent analogy where they said in school, if you get like a 96 on a test, you get an A, but that means you're missing 4%. With an RSU release, you can't miss the 4%. So the idea is a well-structured checklist can help us all achieve 100% accuracy. So who is this webcast really for? I mean, for veteran stock administrators, your processes are likely very mature. However, in my consulting travels, I found that even at like Fortune 500 companies, it's rare to have processes documented. I mean, stock administrators rarely have the luxury of time to do this. So what you typically see for procedures, it's a mishmash. It's emails, notes here, an Excel spreadsheet there, a Word document there. But mostly, and the steps, unfortunately, are inside the heads of the stock administrators, which obviously can make a company vulnerable in the event the stock administrator is out or leaves or isn't available for some reason. Now, and as for the freshman or sophomore stock administrators, hopefully these checklists will paint a picture of the macro. We'll kind of curate all the details that you have to sift through in 400-page user manuals or 40-page plan documents. We're bringing it all together, from the CE hooks and everything else, and putting it in one place where you can see the whole at a glance, and then give you the micro steps and teach you how to gather your own micro steps as they relate to your own unique situation. So let's go to the next slide here. Now, as I stated, the tools and the checklists that we're going to present here were built for a particular client who used a particular software and used a particular broker. Now, of course, the idea is you can see how to adapt these for any situation, because there are 4 really big variables in determining the components of an RSU release. First is the company decisions on how we're going to process things. Of course, there's a plan document, which can be unique. And then you have the equity plan software, which has its own requirements and quirks and processes. And then finally, you have the designated broker, who has its own rules and what needs to happen before an RSU release. So we feel the concept of the checklist alone is strong, and you should be able to adapt these concepts for your own situations. So,
and Dan, I just want to give you a heads up, we're running just a little bit behind, so just a heads up on timing.
Thank you very much for Elizabeth, our timekeeper. So let's look at the first tool we're going to go into. Again, the function of this macro tool is to view all the release prep categories in a single page and put everything into context. It lets you see how everything is interconnected and interdependent. Now let's take a quick look at this. Now, I know you can't see this, but I'm showing this here just so you can get a picture of the whole. Just to look at the design of the components. So for example, on the row up type, we have the person who's going to do it and what the release date is. The column on the left, we have the major categories, which we'll talk about in detail. And in the middle, we have the action items. And then off to the right, we have when it needs to be completed by. And then we know if there are procedures. And then at the far right, there's a place for you to check off whether it's done or not. At the bottom, there's a place for you to sign off, sign a date that it's done, and at the bottom, if an auditor or a manager needs to sign that off, that's there. And then lower left, we have a key for all the abbreviations and acronyms. So that's the general philosophy. Categories, details, timing, and then checking off when it's done. So as far as the advanced prep thing, I mean, here we call it a six-act play. And I will state that we're going to go over these quickly. There are so many topics here. There are many topics that could warrant their own 1-hour webcast. So we're going to be kind of skimming over this on a high level. We may be digging into more detail on some items, but this will be kind of a high level analysis. So let's just take a look at our first checklist here. So I'm going to escape out of this. I'm going to hit Excel. And here's our first checklist. This is the macro view, and this looks at the major categories. So on the left, first and foremost, it's identifying the release dates, participant, and shares. You notice the first item there. It's always good to maintain a release calendar. Sure, you can run the pre-release reports, but it's often helpful to create a little calendar where you can just look at it several months out so you can plan for your vacations, everything else, resources. Very handy. Now, the first thing you need to do is run a report. Now, every software vendor should have some kind of a pre-release report that gives you all the participants, the shares, the dates. And this is an important thing to also run up front because you don't want to process a release and just see the output without knowing what output you were expecting up front. And this is kind of a stock administration 101. But you run the pre-release report, look at the number of participants, shares, and award dates. And so on the back end, when you actually run the release, you can audit it to what happened on the front end and make sure you're catching everybody. Because we know all the weird things happen where people drop off for some reason. So we're going to run this report, and let's just talk about some of these movements here. The first is having to relate to the tax payment elections. We know that many groups could have their own group of elections. I've been there where sometimes rank and file are allowed to for X, Y, and Z, where officers are only allowed other elections. So many designated brokers do have online election capacities and applications where you can set these up, and it's all done. The alerts are sent out, and people all submit their elections online. Let's see. Now, and I know that Carrie, you maybe have something to add for E-Trade on the election process?
Yeah, absolutely. Thanks so much, Dan. So I think there's a lot of things that fall under tax payment elections. This is the one that trips up people sometimes the most. But so first and foremost, if you, when you have a release coming up, it's important to work with your broker and let them know of your upcoming release, especially if it's off cycle, there's something unusual about it, or if you're going to need additional support. They're there to help you, so certainly you should reach out to your broker. And I think it goes without saying, but it's never too early to ensure that your employees have active stock plan accounts, that they've accepted their grants if you require acceptance. And the kicker, I think, everyone's pain point is W-8 bends, if the employee has the proper tax forms on file. So this isn't certainly something you should be doing a week before you plan a release. Sadly, W-8 bends, I think, are an ongoing effort for all stock plan administrators, and you're working on it year-round. And then one other thing to consider also is if you have a thinly traded stock, or even if you don't, if you do a lot of sell to cover, there are people or companies that like to use special handling, so you can talk to your broker about that and see if that's appropriate for you and is well suited to your company style.
Great. And also, another thing up front, if you do have a group of participants who are not using the designated broker and they're using another broker, it's important to identify those participants so you can set up all the, the DWAC and issuance information up front. And Carrie, is there something else you wanted to touch upon with the other broker setups?
Absolutely. So very often, it's not uncommon for executives to have a preferred broker that might be outside of the broker that's used for, the rank and file employees. So if you only work with that broker a couple times a year, it's really important to reach out to them in advance, let them know about the upcoming release, confirm that their process and expectations are aligned with what your process is, and to make sure everyone's on the same page, because the last thing you want to do when you're working on a release is realize that you're having problems reaching that broker, you don't know who to send it to, you may not have the DWAC instructions, anything that would cause a problem and then could ultimately delay releasing those shares.
Great. And the next area is all about release prep, and we're going to go into more detail on that on the next few tools. But the big takeaway from this report is from this checklist is, remember, identify what's going on, run a report, get your tax payment election set up way in advance. If there are other brokers, get those set up. And then we're going to talk about how you can run a report to manage all these, what we call release prerequisites. Now, the last two items here before we leave this item, after release prep, which we're going to talk about, yeah, there we go. It's also great to set up a time where you can run a test release if your software system allows. I know some do, but it's great to get everything set up, run the test release prior, and then make sure everything's in order. And again, this is the tool I created. You can certainly, these are the major high points. People may want to embellish it or change it, but these are the fundamentals. And then finally, at the bottom here,
the next checklist, Dan, sorry.
Let's do that, thank you. Okay, so let me quickly go to here and then to here. Okay, now these next two tools have to do with what happened for me happened to be 21 audit points, and maybe 16 or 25 or 12 or 8 for you. But the idea here is to identify and track in a single document all the key things and criticalities that have to happen before RSUs can be released. And again, the shapers of the list will be determined by the company, the plan, the software, and the broker. And then we have a report here that will work in conjunction and as a companion with this tool. So let's go to that tool here. First, we're identifying the 21 audit points. So here we've got this checklist that identifies my audit points. And then we run a report. Let's look at that real quick. It's a shares to release point report. And I embellished this. Sure, there are certain fields that were standard, but based on the certain prerequisites, you can embellish this with all the criticalities. For example, the tax payment method, or are there any officers, or anybody subject to Rule 144? The acceptance, that has to do with the online grant agreement, which is often required. Activation status, was their broker account been activated? And this is the restricted stock terms and conditions. And then I put the state there for people to track for tax setups, which we'll talk about later, election profile, and then the performance goal status. So these are all the things that I was able to track by using filters. For example, you can see who hasn't accepted their grant, who hasn't opened their broker account very quickly and easily, all in one place. And then this tool here, the 21 audit points. So if you look at the columns, we have columns A, B, C, D, E, F, G. The companion report here, if you look in the column B, in a little parenthetical, I have the cross-reference to the column. So what this is all about is to identify really all the things that have to happen. And I was discovering these things as I was processing this the first time, but you can see these are all probably column elements that many of you are familiar with. For example, in block trading, I had a client that didn't allow in a blackout, you could have the release, but they couldn't sell, so we had to make sure that we blocked the trading for all those people. Again, we have acceptance, activation status. So, yeah, so there we have it. And then down to the bottom, we have some categories that were not on the checklist. Obviously, terminations. Naturally, if there are unvested shares and somebody terminates, it's critical to get these loaded in your system prior. I also, if you're working in a smaller company and the stock is thinly traded, if the tax method is sell to cover, dumping a lot of the shares in the market to sell could hurt the market. Or some brokers, if the shares to sell reach a certain threshold, the broker wants to handle it at their special handling desk, so you can run estimates up front to estimate the shares and make that decision way up in front. We also have mobility issues and I guess this is another opportunity for Carrie, you to maybe share your knowledge on mobility.
Sure. So I think for mobile employees, one of the things that is a good thing to focus on when you're prepping your release is for both global and those that move globally and those that move state to state, which hopefully everyone is doing by this time. It's really important to identify when you're going to stop processing that transfer data for a particular release. Are you going to cut off anyone moving a month prior, a week prior, a day prior? Really, regardless of what your policy is, you just want to make sure you're consistent and your approach is appropriate for your company's risk tolerance. And if you're doing pre-releases and you're running tests in your database and you decide to be able to, take a transaction or a mobile employee to a day prior, that's obviously going to change your outcome and you're going to be doing a lot of work the day up too. But if you give yourself a little bit of a cushion, sometimes that'll afford you the opportunity to have everything kind of locked and loaded so you have a much easier release come that time.
Great. And I think we also discussed, you might have some input on insiders as it relates to RSU releases, Carrie.
Yeah, I think one of the key things just to think about is making sure that you're looping in your business partners as you're going through this. Stock plan administrators are very well oiled and they, other than maybe needing a more robust checklist, they know what they're doing. And so sometimes I think we lose sight of looping in HR or payroll, but even the outlying partners like investor relations. You should certainly make sure that they know about the upcoming release. And if there's any Section 16 officers that are going to be included, they should be apprised of that because once a Form 4 will be filed, if there's any questions from shareholders or analysts, it's going to go straight to IR, and you certainly don't want them being caught off guard.
Great. And also as it relates to the requirement to accept awards, either online or paper, often a very key thing, and I know, Chad, you had some experience to share on this topic.
Yeah, thanks, Dan. Just real quickly, you might want to, prior, obviously, to the releases, kind of do an analysis of the acceptance rate that you currently have. And you see it's really low. You have a high percent of those not accepting. You may want to think about in the future when you go to grant these specific awards, maybe setting some type of time period for acceptance or being able to, at a certain level of employees, being able to accept on their behalf. Now, whether acceptance rates are due to miscommunications or difficulty in being able to get into accept the awards, those types of things you need to really understand and pinpoint if there's certain regions or certain particular misunderstandings or no understanding of the value of what they're receiving. So just things to really consider. Thanks.
Great. Thanks, Chad. So, and again, as you can see, we could go on and on about all these categories, but the general concept is to group all these considerations into one place, and then I've got the report. That's my companion piece where I can track everything via filters, and again, at least it gave me some serenity. So let's. I think are we on track, Elizabeth? How are things going?
We are on track. We're 1 minute ahead of when we need to move on to taxes.
Fantastic. So let's move on to taxes. Obviously, one of the biggest things to do. And so also what's very interesting, I found that as people know, many companies are kind of phasing out their stock options in favor of granting RSUs and performance units. And since transactions for RSUs are scheduled, unlike for stock options, which can happen only any time, it's really not as necessary as it used to be to load a new payroll file to your software every 2 weeks. It's really only critical to do it in advance of every RSU release, which might occur only a few times a year. So I know many people are in the habit of constantly uploading, and it's good for modeling, but it's really.
But let me chime in on that one, Dan, and I wasn't planning to chime in, but people who know me know I have a hard time not chiming in, is that a lot of these companies that have moved to RSUs also still have those options outstanding that could be exercised at any time. So if you have any of those options still outstanding that could be exercised at any time, please do upload your taxes every 2 weeks. And now I'm going back on mute.
No, great point, exactly. But it is becoming a potential change in how we need to look at payroll when the options are gone, exactly. And while they're still there, of course, it's critical. But this, I found for me, was such a critical and maybe complex item, because it's looking at all the participants who are about to have released, seeing where they are, looking at the tax requirements, and then setting up the tax at the company level, and then setting up on the participant level, and then uploading the year-to-date. So this is, for me, was a big learning experience. So let's go to that checklist. So checklist, it's all about the checklist. So here we have these major movements, and also what I discovered here is that the supplemental income rates don't necessarily match the wage rates. So you can't necessarily go to a payroll report, look at the wage rates, and apply those for supplemental income rates. They vary, so you need to make sure you get the supplemental rates. So first, it's all about the audit. The first category here. It's all about the audit at the company level. Making sure which states and countries are involved, and then going out and clarifying with payroll managers, or internationally or domestically, and sending them a list of the participants who are about to be released. Because as we know, with countries outside of the U.S., the rates are all over the place, and there's so many considerations that we're not privy to. So it's wise just to get the rates, identify the participants in the countries, send out to whoever you need to contact internationally way in advance, and let them send you what the rates are, because they also might change from the last release. So that really kind of needs to happen with every large release. And then you update the system at the company level, and then you're need to do it at the participant level as well. So, and again, you should have various reports from your software where you can pull down what rates you have to see if you need to create new tax codes, so on and so forth. So let's move down to the next movement here, which is auditing the tax setup and the participant records. So again, there should be certain reports where you can pull it down, and if you need to bring in information for other systems, and you may have to VLOOK that in. But the idea is to look at every participant, look at their array of taxes versus what their requirements are, and then attach those tax codes to all the participants. And yep. Let's see. Local taxes are tricky as well. That it really requires a consultation with payroll to identify who has local taxes. And then, of course, we're updating the participant records with the year-to-date income and taxes. And then the audit. I know I kind of skimmed over this fast. Chad or Terry, anything to add here? The checklist is a pretty good guideline. Of course, your situation will vary, but we can't stress enough. This is a way in advance criticality, and very important. Anybody else want to comment on this?
This is Carrie. I don't know. I think it kind of fits in here a little bit, but just overall, I think my absolute favorite thing, which shows I'm a little bit of an accounting geek, but is pulling together a detailed memo, and not a checklist, but an actual memo of all things RSUs, such as your withholding process, you know, if you do a sell to cover in certain countries and you do a withhold for tax in others, anything like that, how you arrive at tax rates you're applying by country, how you're going to allocate those tax rates for mobile employees, anything special you're doing for a particular country, for example, China safe. If you round up to the nearest whole share or you round down, pretty much anything that could have a potential accounting or finance implication, and then put it in a pretty little memo and give it to your auditors. And from past experience, I would typically do this once in the beginning of the calendar year, once you've updated your tax rates for any countries for that year. And I think it's not only a good process to ensure you aren't missing anything with the auditors and that they're on board with your process and policy and your approach, but also within your own stock team to ensure that you're thinking of everything and identifying if any of your processes or practices have changed from year to year. Because when you have to write it out and do a descriptive narrative, you kind of take a different approach than checklists, which sometimes, you know, are more abbreviated descriptions of what you're doing. And then I think that also begs the question, if you do provide tax summaries to your employees, make sure that those are updated and reflect the withholding rates that you'll be applying to a particular release. And it's also a good idea to have payroll look at those well in advance to reconcile any discrepancies, because sometimes they will, I know when it comes down to social taxes and some other areas, sometimes they have a difference of opinion than maybe how stock would take it. So you want to make sure everyone's on the same page before you utilize any tax rates.
Great. And I think we're a couple minutes ahead of schedule. Chad, any wisdom you'd like to share on taxes? No pressure.
No, I think you've covered it. You've done a great job.
Chad's going to get a chance to share his wisdom when we get to retirement eligibility. So
that's right. And speaking of which, I'm about to move to that. So moving on to what we talked about up front, we're going to give Chad an opportunity to really go into some detail on considerations for retirement eligibility. And let me state up front that the tool he's presenting isn't really a checklist per se. It's more of like a table of considerations. Of course, I'll let Chad speak to this. So ladies and gentlemen, Chad Settle.
Thanks, Dan. Hi, everyone. So you've taken in a lot of information with Dan and Carrie, and kind of revert back to the first screen that you saw with all the things to think about and consider. Well, let me just add one more to this. If your company has a retirement eligibility provision or implementing one, and you've seen this, maybe haven't seen this for the first time, there's really a lot involved with this one small piece as it relates to FICA taxes and 409A rules and so forth. So just at a high level, for purposes of equity plans, let me just explain. Most companies define retirement as meaning a certain age, such as 65, or maybe a combination of age and service, such as 55 years and 10 years of service. So from an employee's perspective, becoming retirement eligible may be very valuable. However, from an employer's perspective, the RSU vest and release, like I said before, can be filled with many complex administrative tasks. So as you see on the slide here, there's really 4 categories I'd like to touch on, and then provide a few things to consider with the execution of a retirement eligibility process as it relates to time-based RSUs. So the first would be, know and understand your retirement provision as it's stated in the plan documents. Secondly, you'll see you want to connect with stakeholders to ensure the proper resources are there for you. You want to be in compliance, and you want to make sure you have the necessary steps in the administrative process. Thirdly, you definitely want to communicate the process to the U.S. retirement eligible employees and the FICA taxes that would come along with this particular provision. And fourth and final, you want to manage the process in coordination with strong communications. You want to be able to use this to identify your eligible employees and ensure that you've properly done the correct tax withholding and haven't overtaxed folks. So with that, if we can move over to the table of considerations, I'd like to briefly, cover everything in here, not so much cell by cell, but really this tool is things to consider more or less if you, like I said, are implementing this for your company for the first time, or maybe you've decided, hey, the administrative piece of this is not working, and maybe we need to move to revise our grant agreements to include a different avenue or alternative to the retirement provision as it relates to, the actual treatment of the RSUs. So we kind of take a look at the category over in column A. We first want to start with review the plan documents. Like I've discussed, you really want to understand the plan, the language in the plan of retirement, and you want to understand the treatment of the RSUs. And this is really important in understanding that at retirement eligibility, once this is met, there's really no longer a risk of forfeiture under 409A rules. So what you might see, with different companies, some types of treatment, they might cancel upon a retirement. So that's a very easy way to administer the RSUs. Everything would cancel. But when we talk about a continuation of vesting under original terms or some type of acceleration of all or a prorated portion, we really start to get into some complex processes and things to consider. In all this, you still need to revert back to your actual plan agreement to make sure you've covered everything, that you're actually offering the employees what's actually in what's documented to make sure that you're in compliance. So I think, once you've understood that piece, then you want to really connect, bring in all the stakeholders, bring everybody to the table, and make sure that you've got the proper resources and you've talked through everything in a very detailed way to make sure you're going about things properly. So first of all, I think you want to talk with your HR team, the executive team, to make sure that what's in the actual grant agreement, whether it's, many alternatives or maybe it's just one alternative that you have to collect FICA taxes once this retirement eligibility has been met. And if I haven't defined FICA, that would be your Social Security and Medicare taxes from the employee side. Now, the employer still has their obligation to pay, but we're strictly focusing on the employee side. So if your plan allows you to, allows payroll deduction or stock withholding, then you need to really assess the resources and decide what's best for your company. Let me just mention that the rule of administrative convenience, which you may or may not be aware of, this makes things a little bit easier in terms of being able to collect taxes on your employee populations once they meet the retirement eligibility provision. This allows you to collect a single time during that calendar year in which those folks meet the provision during that calendar year. So there are some drawbacks to that, and I'll go to that in a minute, but I just wanted to throw that out there so you understand that particular rule. Payroll is going to be very important because if you're looking at payroll deduction, you really need to, in the back of your head, really model your population. You really need to understand if you're using the rule of administrative convenience, this might be a big hit to someone's net paycheck. So the actual FICA withholding may be too large of a percent of your net paycheck, and you may, as a company, decide that's not the best approach that you want to take. Maybe you want to go share withholding if that's allowable within the plan, and then you get into other complex situations with that. So just other things to consider if you do use the rule of administrative convenience. Obviously, pushing this back later in the year gives the employees more than likely less of a tax hit because later in the year you've hopefully met the Social Security tax limit and you're only withholding FICA. Medicare. So it does bring down the tax obligation on the employee. Let's just move a little further into HRAS. So you need to identify the eligible population. So you need to understand, is this going to be a manual process, or is this something you can set up within your HR system of record to be able to identify based on what the retirement definition is? So this could be pretty complex, and if you were to have some automated file feed, that's great. You want to just ensure that there's testing involved and everything is working properly before then you go and identify and work with your equity vendor and platform to make sure that that's working properly. You know, definitely want to talk with finance and accounting to make sure the treatment, they understand, everyone's on board with the treatment of the awards. If it's, you know, cancellation upon retirement, then that's very easy. There's a true up once the retirement is, or once the termination of retirement is done, and so those shares can possibly be placed back into the share pool. If there's an acceleration or if there's a continued vesting, obviously the expense is pushed up into that time period. All the expense of those unvested shares are now accelerated. So you just want to make sure that everyone's on the same page and the reporting capability is there, or at least there's something manually that can be done to identify this. And that's where the equity vendor comes into play. You know, this whole FICA and retirement eligibility provision can be difficult to administer. There may or may not be the possibility to do share withholding if you're looking to do that within your platform, because if you allow for any type of continuation of vesting, you've got a vest and a release date at different times, and being able to really track that can be very difficult and may not be conducive in some of the platforms. So just want to talk through any type of custom fields that you can use to identify the awards, the employees, and be able to have that really set in stone and working properly. And then finally, you want to pull in legal in your communications team. You want to make sure you've covered any special situations, any additional compliance issues, as well as your communication team to make sure that you, prior to any communication, the drafts that you've put together seem clear and concise and are ready to be put in front of the employees. Kind of moving down, and I'll move a little bit more quickly here. Employee communications, there's a couple ways that really you want to get in front of your employees to make sure they understand this. You want to provide an internal employee communication if possible, with including FAQs that would show an example how this works and what are the mechanics and what is the time frame, so they really truly understand. You also want to get your HR leads involved if you have, you know, a larger corporation, to really get in front of these, especially with folks that are terminating, and really getting in front of being able to collect those taxes in a timely manner. You also want to use your equity vendor, if possible, to actually place alerts on awards or accounts. That's another way to get the message in front of employees to make sure they understand the implications and the IRS rules. And then really we get to the actual ongoing administration. You know, like we said before, we really need to ensure that the population is identified either in the system of record and or the actual equity platform. Another thing to think about is key employees. So not only do you have identified the eligible population, but these key employees, because if your RSUs are considered deferred compensation, then you're actually going to at the time of release going to push that back 6 months. So things to consider and be able to identify, and your key employees may change from year to year. That's, you know, your top 50 within the company. So things that you're really going to have to get with HRIS or, you know, your system of record to really be able to change and identify, and things to really think about. Exception processing, so we have folks who terminate. If you have continued vesting, really the process to stay on top of that, you're still going to have communication if they change addresses, being able to collect that FICA at the necessary times, whether you're collecting via the last paycheck, some type of severance or vacation, whether writing a check to you or share withholding or so forth. And then obviously the big piece is at the actual release. You know, you've already withheld the FICA at vest, so if you have an accelerated vest, great, you can do it all at one time. You can, but if you have share withholding at a future period, this is where it gets a little complicated as well, because not only are you withholding shares at the FICA, but those shares that you withheld are also taxable at the federal and state level. So your employees are getting hit with an additional tax that really they probably don't want to understand. And then finally, at the release, you just want to make sure that you've identified those folks who have already had FICA withholding, so there's no double taxation. So that's kind of it real quickly, some things to consider.
And we're right on time, and we allowed 10 minutes for questions, but we've been answering those questions. Actually, I've been just typing in responses to questions, and not specifically about RSUs and taxes and retirement eligibility, but just in general as we go. So if there are any other thoughts you want to share or any other points that anyone on the panel wants to share, or if anyone listening into the webcast has any questions that you'd like to type into the Q&A text box, we have 10 minutes left to address those questions or any additional comments from our panelists.
And I got that. I'd say to Dan Strickler here. I know we covered a lot in a small amount of time. Hopefully, the checklist can stand alone and be of some kind of use going forward. Because naturally, we for everything to talk about with our RSU release, we could have filled up a whole nasty conference with panels and everything else. But so I know there's high level, but we hope it was useful.
Carrie, did you have any additional closing or parting thoughts you wanted to share?
No, I think, again, we're all probably guilty one time or another of saying, oh, I'll remember this next year when something when something pops up or you get a funny little kind of curveball. So it certainly makes sense to sit down and just jot it. Even if you don't put it formally in the document, put it somewhere so you can add it in. Or at least you don't have to, have history repeat itself. If it's a bad thing. If it's a good thing, then of course you want to do it. But that's my only advice.
Okay, so Shauna, I actually think we're going to wrap up a few minutes early, unless I haven't seen any more questions come in. Let me just check one more time. Oh, we do have one question. Hooray. So I have gotten a number of questions, and I'll just answer. I've been answering it in text, but we did have a number of questions come in, so we'll get to those in a minute. But the main question today was, will we be providing the checklist in an Excel format? And I've gotten that question several times, and I've gotten a couple more just now. And unfortunately, we will not be able to provide it in Excel format because it is SOS intellectual property. So I apologize for that, but we hoped that the PDF would be somewhat helpful. Now, on to the other topic matter questions. Hi, when you have a large group release, do you allow participants to elect W-4 rates, or do you apply the blanket supplemental rates to everyone? And I have an opinion on that, but I'll let our panelists talk first.
This is Carrie. I would say blanket rates. I think anytime you allow, and this is just a personal preference, and sometimes it depends on your company's culture. Some companies are very employee-centric, not to say that if you don't allow it, you're not, but they go above and beyond. I think anytime you allow, specific elections, it just lends itself to miscommunication. You have to monitor it more. You have to communicate it even more, make sure people understand what they're electing, make sure you understand the tax rates, and sometimes it's just a little bit easier to kind of have something uniform when it comes to taxes.
And I couldn't agree more. Dan and Chad, feel free to chime in. I actually do not know. I'm sure they're out there, but I have not worked with, in my 17 years in equity comp, I haven't worked with a single company that uses W-4. So it's just so complicated, and very few systems can support it. So flat rate is generally the way we go. But if Dan or Chad disagree, feel free to make me look stupid.
We would never do that.
Sure you would. It's easy. All right, we have another question that came in that says, is it advisable to coordinate an estimated tax deposit with payroll prior to the valuation date for those using the rule of administrative convenience if you anticipate that the FICA obligation will exceed $100K on the valuation date? And I had thought, and this could be an error, and you all know that I'm an accounting geek, not a tax geek as much, but I had thought the $100,000 threshold for the requirement to do the next day tax deposit was in relation to the federal income tax, not for the FICA. But Carrie again, or Dan or Chad, if you know me to be in error, please correct me.
I think it's a matter of practice. Oh, sorry, go ahead.
Oh, no. My experience, I know that it's at least for federal, for sure. But as it relates to, Social Security and Medicare, I would look for maybe a confirmation.
We'll look into that. But Carrie, go ahead and chime in, and then we'll look into that for you. We have a record of who asked the question, and we'll download that, and we'll look into that and follow up.
I was just going to say I tend to be conservative by nature when it comes to all things accounting and taxes. So certainly if you think you're even going to be close to a threshold, which, it's always good to handle that in advance. I don't think you want to be the company that is made an example of by the IRS because you failed to file in advance. So if you can coordinate it with payroll and make it work, I think you definitely should make that effort.
Okay. And we had another question. You mentioned making sure that participants accept grants. Does anyone have any experience where grants are canceled if not accepted within a set amount of time? And I have a little experience, but I'll let you guys talk first.
Yes, I did work with a company, a very large multinational company, where yes, they gave them 9 months. And there was a huge global trackdown and informing these people as we approached the deadline. And many times they were canceled, and it was a lot of emotion. Some people are on leave, maternity leave. So it's a difficult policy to put it in there that if they don't accept the grant, it gets canceled because sometimes a lot of money involved, and sometimes there's a legitimate reason why they can't be available for some reason. So, and it was a huge job. I don't know if that company kept the policy, but it was a huge undertaking as we approached.
To get people to accept their grants, right? That's a great, it's not a carrot, it's a stick, but it's a great stick. It's the best possible stick. And if people aren't valuing them and so they're not accepting them, I would argue that they shouldn't have them. The other thing I've seen, which is a little unusual, and please don't start doing this because it was very difficult to handle in the system the client was using, they would only cancel the tranche that was vesting. They would not cancel the entire award, but that first tranche that hadn't been accepted in time, they would cancel that tranche. That's very difficult to handle, I think, probably in most systems, at least in the system they were using. But I have seen that as well. Let's get to some more questions now. I've asked for questions. We have so many. And we actually got an answer to our question of is it FICA or just federal, and thank you for that. It is all federal taxes, not just the Fed. So then the answer to the question asked previously would be if you are going to have your FICA exceed the 100K limit, then yes, planning ahead for that and working with payroll to get a special payroll run if required for the rule of administrative convenience would be a very good idea. All right, and then we have a couple more questions. Any advice? Oh, this is a painful one. I don't like this one. This is, yes. Any advice on the best practice for handling late RSU releases because of late acceptance? Yet another reason to cancel the grant if they don't accept it within 90 days. But Carrie or Dan or Chad?
I don't really have any advice. I think, again, an ounce of prevention is worth a pound of cure in that case. And I haven't experienced it, but Dan or Chad?
Well, I'm in a current assignment now, and where if somebody doesn't accept it, it is not released, but it stays in a pending release queue. And then when they finally do release, whether it's 6 months later or a year later, they finally do get the shares released. And I think it's at the original price on the original date, even if it's later.
Yeah, if you've got sell to cover, becomes a real issue because now you're going out to the market, so people might have an advantage or disadvantage.
That's true.
In time.
Yeah. And you've also got a vest event that happens separately from your release event, so you had taxes for the vesting that were separate from the release. So I would definitely say if you can, if you're not spanning a calendar year, use the rule of administrative convenience at least for that piece so that you're collecting everything together, not trying to do the FICA and FUTA on the vest and the federal and state, et cetera, on the release. But yes, I have had clients run into that. It's been a while since I got that question, but I have had clients run into it. I don't have any gold nuggets of wisdom to share over it, though, but we'll see.
That's a good thing to put on your auditor memo.
It is a good thing to put on your auditor. But again, yet another reason to cancel those grants that don't get accepted. And don't toll vesting for leaves of absence either. Sorry, I know this is all about what we're dealing with. And we're at 1 minute. Let's see. So the question is, do you use the original vest date or original fair market value? We're going to run out of time, so we're going to follow up with you after. Oh, and there's a differing opinion on the 100K threshold. My payroll department has said that taxes are all federal taxes, so FICA is included. No, it wasn't a differing opinion. I read it wrong. I apologize. And then there was another question. I sent a question to Carrie regarding processes for outsourced clients to process RSU releases. I'm not really sure. All right.
Do you want to forward me that information? I could talk to that person offline.
I think we sent it to you already, but we will
okay.
definitely get you that info. And we will follow up on this. Yep, that's the other questions. We've got a lot of commentary going on, but so we're going to turn it right back over to Shauna for a few closing remarks.
Great, thank you. Dan, if you don't mind going to the contact slide on the PowerPoint presentation, then people can jot down the email addresses of the presenters. That would be great. Perfect. So just wanted to thank our speakers, Carrie, Dan, and Chad, who joined us today, and thank all of you for attending today's educational webcast. Please look for an email in the next day or two with the links to the recording and materials. Thanks so much, and have a great day. Bye-bye.